Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's Landon Swan, the co-founder of LikeFolio. Thanks for being here again today, Landon.
Hey, thanks a lot. Good to be here.
All right, so we're talking Netflix, we're talking streaming. They just jacked up prices. The stock's still down over 40% so far this year, off 50% from all-time highs. Are we going to get a reprieve because the last earnings event was not kind to Netflix? What kind of data are you seeing on the streaming company going into earnings?
Yeah, not kind is an understatement, and I think jacked up prices is an overstatement. They raised it by like $1.50, but yeah, 22% I think on the last earnings report. Absolutely got waxed. Not good for the investor. And the stock is now about half of its all-time highs at about 350 now. I think it hit 700 briefly not too long ago. But if you look at Netflix, this is, it's a story of a company, early dominator, leader in the space, and now they've got a ton of competition catching up with them and starting to take little pieces of the pie. That combined with the fact that you've got people streaming less than they were in the past, and, just in general, living their lives more outside of a TV screen. Things are starting to open up. You guys just talked about the masks coming off on planes. Couldn't be happier. But it's just another sign of more people are looking to get out there and do things. So COVID, again, was the perfect storm for Netflix, people staying home, subscribing, and now that's over. It's going to go the other way. And so they've got a lot of competition. And when you look across the competition, Netflix is doing well, but they're not doing as well as some of the competition. So NBC's Peacock is doing extremely well growth-wise. Hulu is also doing very, very well, and HBO Max. All three of those are doing better when it comes to purchase intent, quarter over quarter, people subscribing, people talking about subscribing. The ones that it's beating are Apple TV, Amazon Prime, Disney, and Fubo. Really struggling, that one is. So it's kind of in the middle of the pack. Happiness, kind of in the middle of the pack. It's in the low 70s. I think it's 73. You've got some around 70, 71, some around 76. But overall, it's just kind of in the middle of the pack in an industry that is seeing a little bit of a reversion to the mean, a little bit of a slowdown. Now, I can see what you guys are putting on the screen right now, and I got to say, this is where they dominate content. Squid Game was the #1 show of the year, and Netflix has 6 out of the top 10 #1 shows. So they are a content machine. That's where they're winning. Them and HBO Max are both doing extremely well when it comes to content. Hulu is doing extremely well when it comes to live options. So a lot of people are cutting the cord and getting rid of all the live shows. But, there's a lot of things you miss with that. Live sports, local TV, that kind of stuff. And Hulu's doing a great job of replacing that. So I think it's, kind of a question of, where do you want your dominance to be? Do you want to bet on the company that is replacing live TV, or do you want to bet on the one that's sort of the content winner, which is very expensive, but Netflix is doing a great job there. So again, crushing it on content and overall kind of middle of the pack when it comes to the industry, which I think is seeing a little bit of a slowdown just because the growth was just so explosive. The comps are impossible to compete with, and people are getting out there and getting off the screens a little bit.
Landon, a quarter ago, they had a nice beat on earnings, but the guidance was what scared investors. They went from 8.28 million subscribers to a guidance from fourth quarter to first quarter of 2.5 million subscriber growth. And that scared investors. You saw the price action. A lot of the stories I've been reading is that they really underestimated subscriber growth, and they're looking for a pretty good beat here, almost a shocking beat in terms of the numbers. Now, the numbers are still going to be lower than during COVID, but make no mistake, I'm hearing numbers, like I said, they guided to 2.5 million. I'm hearing numbers 3 or north of 3 million. And that this stock is obsessed with subscriber growth, Landon. Did they go too far in selling this name off? Is this the Tesla of streaming? Means there's competition out there, but this is clearly the leader, Landon, in terms of streaming. What is the street, is the investor, is the day trader missing anything in terms of Netflix?
I don't I don't think they're the Tesla of streaming. I think Tesla is so far ahead of its competition that it's not even close. And I think Netflix is the clear leader, but it's not leaps and bounds. And I think that any other company can make a huge run at them with a good year of fantastic content. They can make a huge run at Netflix. And we've seen, Apple TV has done a decent job at that. HBO Max is doing a good job at that. So I think that, if one of these companies, one of the competitors come out and just, crush it for a year on content, they could be in the running for the #1 spot. And I don't think there's an electric car company that could even come close to Tesla in a year. But I do agree there may be some sandbagging on these numbers, right? I mean, I don't know how to get into the CEO's head, but if you think about, well, let's just take it on the chin this quarter, and then next quarter we'll be able to beat. Maybe that's the play. I don't know. You go from 8.3 basically to 2.5 on guidance. Then you're setting yourself up for a situation where a 3, like you said, is a big beat when really it's just horrible compared to what you had the quarter before. So maybe they're doing a good job on that. You can see, though, some of the trends are helping, some of the trends are hurting. You got subscription fatigue up quite a bit year over year, plus 37%. That's people saying, basically, I've got too many subscriptions. Either I can't watch them all or I'm paying too much, something like that. It's getting a little bit more frustrating for people. But then you've got the fact that the other 3 are also up. So streaming, smart TV usage, and cutting the cord are all up. So all 3 of these are going in favor of Netflix. The big one that's the biggest is going against Netflix. And the price raise from 13.5 to 15, I think, is not helping that. It's going to increase that conversation around, well, maybe we should cut some of these. Back when Netflix was $7 or $8, it was a no-brainer. You get up to 15, that adds up over the course of a year. So I think that's on consumers' minds. But I'm very interested to see what the reaction is to the number, because I agree. I think that certainly has to be over 2.5. If it's not over 2.5, they sandbagged and didn't make the number. That's just awful. So it has to be over 2.5. And then what's the reaction to that? What does the street react to that? Because at one point you're comparing to 2.5, but you're kind of still comparing to 8.3, right? I mean, you got to give them a pass a little bit on COVID, but not that much. I mean, the growth rate dropping by over 50% is scary as an investor. So that's my kind of 2 cents on it. Now, I will say that their earnings score is pretty strong, actually. They've moved up over the last few weeks really well. They're actually at a plus 40 right now. So we put our earnings sheet out every Sunday. They were a 31 on Sunday, and now they're already up to a 40. So it's moving up in the right direction. So it's bullish for sure. And with the stock cut in half and the sandbagging numbers on the guidance, maybe they can come out with a nice beat here.
Yeah, and Landon, when you mentioned, the stock was hitting over $700 in November, and it's fallen from about $508 since that last earnings call. So that's the way I kind of want to look at it. It doesn't seem like a lot of people will drop Netflix just because it seems like every 3 or 4 months they have a blockbuster show. You mentioned Squid Games, Bridgerton comes out, where it's almost like right when you think you're going to cancel the streaming service, they come out with something else that you want to watch. Is that what you're seeing, where you mentioned content being the king for this company, but I just don't see enough good content out there right now for people to sustain that pay hike and subscription fees, and the fact that, hey, maybe the good days of content are behind them because now everybody else has their own service and they're going to put their own content out there and not use Netflix at all anymore.
Yeah, it's tough. I mean, you can see on the chart, like I said, Squid Game was #1 for the year. Bridgerton season 2 also doing very well. Nice little pop over the last little bit. But you're right. It kind of reminds me back many decades ago when there was 4 or 5 channels. That's kind of what the streaming was. But now it's getting into, you've got so many different options that content is just a very, very thick competition, very difficult. And Netflix has shown that they have the ability to produce blockbuster shows and keep you coming back for the next season and the next season and the next surprise show. But so a lot of these other companies are out there too. So I don't know. I mean, I think that the timing is really important. I think that they have the data on when people renew, when people are looking at it. And I think that a lot of the releasing, if they're smart, is timed around that. If you ever start to think about canceling, then the new show comes out. I think that, if they're doing their job well, then that's what they're trying to do. But it is so difficult with all the competition out there to be and stay the number one in content. They are the number one. They've had that position for quite a while. Very impressive. But there's so many big companies coming after them. I mean, Disney, Apple, Amazon, they've struggled, but they're still trying. NBC. I mean, there's some big names coming after Netflix when it comes to content. So they're in a tough spot to hold that number one position.
Yeah, and your score going into this, Landon, pretty positive or not?
Yeah, so it's right now it's a plus 40. So
Okay.
it's definitely bullish. And I think some of that has to do with what we look at a lot is the derivative or the acceleration, and they are moving in the right direction. For quite a while, we were bearish on Netflix. The numbers were just way down. Everything I think our score, our purchase intent led the stock price by 3 to 6 months, something like that. It was way down, way ahead of the drop, but now it's starting to move up and it's starting to accelerate. So some of that has to do with Bridgerton. But season 2 being released. But like I said, it's moved up from 31 to 40 in just a few days. So we're at plus 40 right now, which is firmly bullish. Not, push all your chips in, buying out of the money calls or anything like that, but definitely bullish.
All right, good stuff as always. And we'll have to watch that guidance because that's what killed the stock last earnings event. So even if they do come in with plus 3 million or more, they don't guide any higher for the rest of the year. We could see. But that being said, it has pulled back pretty significantly. All right, Landon, great stuff as always. Appreciate it.